I'm Aaron David Miller, and this is Carnegie Connects. Good morning, good afternoon, good evening, wherever you are in this world of ours. I truly hope you're safe and sound. I'm Aaron David Miller, a senior fellow at the Carnegie Endowment for International Peace, and welcome to Carnegie Connects, a set of virtual discussions, at least for now, on issues of critical importance to America and to the world. Today, I'm really pleased to welcome both Helima Croft and Bernard Haykel to the program for an in-depth discussion of Saudi Arabia, oil, and American foreign policy. You know them both, but quick intros are in order. The inestimable Helima Croft, who's graced this program before, is a managing director and the head of global commodity strategy and Middle East and North Africa research at RBC Markets. She specializes in geopolitics and energy, leading a team of commodity strategists that cover energy, metals, and cross-commodity investor activity. Helima, welcome back.
Thank you.
Bernard Haykel, distinguished professor of Near Eastern Studies and director of the Institute for Trans-Regional Study of the Contemporary Middle East and at Princeton University, and author most recently of Saudi Arabian Transition. I've known and talked to Bernard over the years. I'm truly pleased to welcome him today. Bernard, welcome to Carnegie Connects. I must say, today's session benefits both from your deep expertise and from the reality of good timing. Today's conversation is literally nestled between yesterday's virtual and somewhat short, Helima will be asking you about that, OPEC Plus meeting and an agreement on a G7 plus Australia price cap, as well as an embargo on Russian seaborne oil, which I believe, the two of you can correct me, is due to take place today.
It started, yes.
It's already started. So a lot of uncertainties and a good deal to talk about, both in terms of the oil front and, of course, the U.S. Saudi relationship. Before we talk about yesterday's OPEC meeting, though, I wonder if it might be instructive for our viewers and listeners to hit the rewind button for a minute and to get each of you to talk for a minute or so on the geopolitics and the oil strategy of the last meeting in October. That meeting, as we know, led to a production cut at least announced, of up to 2 million barrels and support for Vladimir Putin. At least that's the way it was perceived in Washington. The fact that the Russian Deputy Prime Minister, Helima, you may know him, who's currently under U.S. sanctions, showed up at the meeting, put a pretty fine point on the message to Washington. And it was perceived, and this is what I want to talk to both of you about, pun intended here, as, quote, my phrase, quote, crude diplomacy, unquote. So, Helima, to you first. How would you explain the OPEC Plus decision, briefly, of October?
Yeah, I think it's very interesting. It's where you sit as your perspective on it, because many of us who sit in the financial markets, who spend all of our days, looking at Bloomberg to see where the price of oil is moving, when we had the OPEC meeting in September, you already had major market participants coming out and saying OPEC really does need to do a more substantial cut because there's so many concerns in the market about demand weakness, concerns about aggressive rate hike schedules, concerns about continuing COVID lockdowns. And so you had a situation, going into that OPEC meeting where oil was really declining. It had fallen 20% since the summer highs. We had reached certain points in the market. I think we hit 82.66 for Brent. And many technicians were essentially saying that Brent prices could break into the 70s unless there was a aggressive sort of circuit breaker put into the market to sort of change the dynamics of the market. And so 1 week before the meeting, we actually wrote a note where we basically said the market right now is in the midst of a macro sell-off, and we anticipated that OPEC would do potentially a substantial cut to try to reverse the momentum in the market. Now, that's not something Washington wanted, obviously. The Biden administration, had gone to Saudi Arabia. There had been an expectation that there would be OPEC production increases. But frankly, I think the writing was on the wall at the August OPEC meeting, just weeks after the Biden visit, where you only had 100,000 barrel a day collective OPEC increase. And then you had that September meeting where they reversed that. So if you were following the trend line in terms of OPEC and what you had seen in the market in terms of the price declining, I don't think a lot of market participants were necessarily surprised that OPEC took that action. But certainly in Washington, it was read very much through a political lens. It was viewed as aimed at the Biden administration. You had a very, very tough response from Washington. There were moments when we thought actually that President Biden was signaling support for NOPEC legislation to be passed out of Congress. And I actually think the Saudis were taken a bit by surprise by the strength of the pushback from Washington. There have been disagreements between OPEC and Washington over production policy before. But the swiftness and the furiousness of the response, I think, even caught the Saudis off guard. The last thing I'll say before I hand it over to my favorite Saudi expert, Bernard Haykel, is that, I also, when people say, well, Alexander Novak attended that meeting. Well, the Russian deputy prime minister is the co-chair of OPEC Plus. And so he was, as long as OPEC was going to be meeting in person, as long as the Austrian government was going to permit Alexander Novak to show up at that meeting, he was going to show up at that meeting. Now, part of the reason I think they went virtual this time is they didn't want to have such a big story. I don't think they wanted the optics of the last meeting. But again, I think that we sort of miss it a little bit when we say it was designed to show support for Russia. I think it was designed to show support for their own fiscal balance sheets.
Right. Yeah. I think the timing of the meeting, weeks before the midterms, number one, whatever understandings the administration had reached, perhaps not at the level of Secretary of State and oil minister, or certainly not Crown Prince and President, whatever understandings they thought they had. Finally, the issue of Ukraine figures prominently and pervades just about everything. So you'd have to, and by the way, the consequences, quote unquote, that the administration appeared to have said that meeting was going to have, well, it's December, right? And I don't see any consequences. We'll get to that. We'll get to that in a minute. So, Bernard, let me ask you. Helima pretty well summed up the fact this was driven by market realities, not messaging to Washington, although that message, in many respects, was received loud and clear. To you, what's your take?
So, if you look at the situation from the Saudi perspective, the Biden administration was pushing for production increases going back to last fall. And this was 5 months before the Russian invasion of Ukraine. So the Saudis, looking at the Biden administration, felt that the ask was really about domestic US politics because of the rising prices at the pump. They also felt that the US was doing a couple of other things which were irritating to them as producers. The first, and I've written about this, by the way.
We're going to get back to that broader strategy.
Yeah, so
buyers cartel were as opposed to producers.
Yeah, I mean, the use of the SPR to affect price, the idea that that buyers could set the price, that all like irritates the hell out of the Saudis and OPEC generally, because this is a power that they've had and wielded since the early 1970s. So I think the actual differences are structural and not personal. And the Saudis, and this comes from discussions I've had with Saudis, the Saudis are not willing to jeopardize their economic diversification development project in order to help defeat Russia. I mean, they don't like what Russia did, but that's not their war. And as far as consequences are concerned, I don't think the US can do all that much. But the one consequence that we will see immediately of the souring of relations is that President Xi Jinping is arriving in Riyadh in 2 days, I believe. And you'll see a lot of...
No official confirmation yet of that visit, and that's been rumored now for months, but I suspect you may be right.
Yeah, and I suspect that he will be extremely well received. That's all I'll say.
Yeah. Yeah, I mean, we're going to get into the issue of what constitutes a quote-unquote ally, overlapping interests, coincidence of interest values. We'll get to that later. But I think you're quite right. I think the administration and Americans going forward are simply going to have a much more realistic view of what Saudi Arabia is prepared to do with respect to this relationship, and it's going to end up being far more transactional, I suspect, than it's been over the decades. All right, so fast forward. You had did I hear 20-minute OPEC meeting on virtually?
33 minutes. It was
33 minutes. That's
not the shortest OPEC meeting.
Right,
but
there
one
were no
of them.
surprises. So Helima, give us your take or the main takeaways. I think you've explained why it was a virtual meeting. What are the takeaways from this December 4 meeting?
I mean, I think the Saudis and the rest of OPEC are thinking the market is just too uncertain at the moment. I mean, I think they did not want the optics of everybody going to Vienna, wall-to-wall press coverage, having the Russian deputy prime minister, in the building, when there's so much uncertainty about what they should do in terms of policy, because you have this, still concern about aggressive rate hikes from, the Fed. We do not know when China may lift COVID restrictions. And on the other side of that, we now have the first major sanctions being implemented against Russian oil since the start of the war. And so if you are having to figure out how to gauge your policy, these are really important issues that you don't know how to solve for right now. And I certainly think that having the OPEC meeting the day before the launch of the EU 6 package of sanctions, plus the G7 price cap plan, that was not something that they wanted to basically front run. I think they are going to wait to see, in terms of any production adjustment, how these factors play out. So I would not be surprised, come January or February, if you do have a material Russian disruption. Certainly, you're going to have increasing ask by European nations to get more oil from Middle Eastern producers as they essentially wean themselves off entirely off of Russian oil, except for some pipeline imports to landlocked countries. And so if you do have a major hole that needs to be filled, and we're going to have to wait and see if Russia makes good on its threats to cut off oil supply to countries that pay at the cap or below. But I do think that would be the kind of moment where they would potentially come back in with a production increase. Right. The question is, of course, if demand becomes again the big concern in the market, if they decide to do lockdowns for another 6 months, again, we have to look at what happens with the Fed. They do reserve the right to cut production as well. And I mean, the issue that Professor Haykel raises, I mean, for them, this is their economic lifeblood. I mean, oil is the funding mechanism. It is the ATM for the diversification goals. It fuels the NEOM dreams. And I think one of the problems in this relationship and the run up to the October meeting is, I simply think that Washington and Riyadh had a potentially different price point in terms of what their target was. Washington is very focused on, keeping retail gasoline prices below $4 a gallon. On the other side, Riyadh is very focused on funding Vision 2030. And the question is, were they aligned on the price target?
I think we know the answer.
No.
But yeah, exactly. So, but let me ask, before we get to Bernard's take on this, there were reports, am I correct, weeks leading to this meeting, that there might have been a consideration of production increase and then a flurry of meetings and reports that the Saudi oil minister was running around. Were there differences within OPEC? Did the Emiratis want, or the Iraqis want an increase in production? Was that
for this meeting or the October meeting?
This
meeting, yeah. You had a Wall Street Journal article saying that they were considering a 500,000 barrel a day increase. What was really striking was how quickly the response from the kingdom was sort of pushing back on that with an official statement, phone calls being made. And then you had a number of other OPEC ministers essentially saying, no, we are not considering a production increase. Now, the reason why people were thinking that could be credible, why I think we saw markets fall off that day, not just because it was written by the Wall Street Journal, but people were wondering whether the decision to grant the Crown Prince sovereign immunity was somehow a quid pro quo trade. And so I think that's why you saw from the Ministry of Energy a very quick response saying the Wall Street Journal story does not have legs, because they were watching the market reaction. I mean, oil sold off significantly that day because people were wondering whether there was some sort of secret deal for more oil.
Yeah. On the immunity issue, I think the lawyers frankly won out, is my understanding. And I'm not sure the administration, frankly, much to my dismay, I might add, had any other option other than to do that. But Let me turn to Bernard on two points. One, your initial takeaway from the meeting yesterday. And number two, I know OPEC Plus is a consensus organization, but here's my question actually to both of you, but Bernard, to you first. Who drives the train in OPEC when it comes to these sorts of critical decisions, increase, decrease, flatline, to both of you? But Bernard, first, quick takeaway on the meeting on
So
Sunday.
there are two questions there. One is OPEC. So when it comes to OPEC, I think, and Halima, of course, could correct me on this. It's a phone call between the Crown Prince of Saudi Arabia and the ruler of the UAE that typically, happens at the last minute. And that's okay. So now when it comes to OPEC Plus, then you have to include Russia in the equation. I mean, that's a kind of simple answer. Yeah. If I may add one other thing about the October meeting, which I think was often missed, and my understanding is that, Saudi Aramco sets the price of the barrel a month in advance, and that happens, I think, on the 5th of every month. Halima can correct me. The October meeting happened at the same time, and the Saudis kept the same price for November. In other words, the Saudis were signaling to Biden that they're not going to increase the price because of the 2 million, but actually closer to 900,000 barrel cut. So that was a signal of support, right? That we're not politicizing this.
Aaron, I want to pick up on it because I know it underlying your question, because there had been reports right after the October meeting that somehow the Saudis coerced Iraq and UAE into going along. I mean, I was actually at that meeting, and what struck me was the night before the meeting, I've gone to meetings before where there's actually been a lot of dispute. I've been at meetings before where ministers have walked out. Typically, the Iranian delegation was famous for walking out, but like the Angolans will walk out, and then you go to another day. And what we didn't have this time was any sense the night before the meeting that there were major divisions between the producers. So whatever had to be worked out had been worked out well before that meeting happened. And on the day of that meeting, it was a pretty straightforward. The drama came once the decision was announced. At least in the 48 hours before that meeting, there wasn't a lot of sense of disunity. And again, I've been at these meetings where they've gone an extra day. And when you bring up the UAE, it's really important because we had a situation where the UAE, the summer before, had decided they did not agree with the production benchmarks. And we had 17 days where we did not actually get a decision. And so when the UAE wants to raise an issue, they have held the line before. And so to me, what struck me about this meeting was, at least being in Vienna, there was not a sense that there were major divisions. Whatever dispute had happened over the production policy had been worked out before they got to Vienna.
Got it. Okay, so before we get to my favorite subject, the geopolitics and the U.S. Saudi relationship, Helima, let me turn to you first. Can you give us a kind of Cliff Notes 101 course on the two issues that this Carnegie Next is sort of sandwiched between? One is the price cap, okay, and the other is the oil embargo on seaborne Russian oil. I gather from my layman's understanding that the objective is to set the price on the cap now high enough over the cost of actually extracting oil so that the Russians keep selling, but low enough so their profits, let me use the word, not damaged. Clearly, they are not going to be damaged, but their profits are dented. So what is this a real price cap, or is this just a restriction on insurance and shipping companies? What's the point here?
Let's wind this back. We need to go back 6 months ago, because 6 months ago, the European Union did the sixth package of sanctions, which included an embargo on seaborne oil into Europe. There was the Germans and the Poles also came out and said that they would, by year end, phase out pipeline imports. Several landlocked European countries, like most notably Hungary, got an exemption to continue taking pipeline imports. But the other component of the sixth package of sanctions was a ban on the provision of services to move Russian barrels to third countries. So India, which has essentially been the country that has backed up the truck and taken the discounted Russian barrels, India would find it very difficult to continue importing Russian oil, even at current levels, without access to, Europe, Western ships, Western insurance. Particularly insurance is a critical issue. I mean, Europe and the UK, it's like 95% of the insurance market it's basically from the UK and from Europe. And so what happened when these sanctions were announced 6 months ago is it sparked real concern in Washington that you could have not just a situation where Russian barrels were no longer going to Europe, but that you would see a significant number of Russian barrels move off the market, that the services ban would essentially act as a secondary sanction. And so there was real concern that you would see a spike in oil prices simply because you'd be losing potentially, several million barrels of Russian oil off the market. Hence the price cap. And that price cap is designed to allow service providers to continue moving Russian barrels, Western, as long as the purchaser attests to the fact that they are paying at the cap or below. Now, they set $60, but this is a price where it is higher than where Urals, the main Russian crude grade, is selling now. And it is, but it is potentially high, it's not, setting it at, Brent prices, which is, now $87, it's 60, but Russia's already been having to take a discount. And so the question is this largely an effort, which I think it is, to keep Russian barrels on the market and frankly, prevent a price spike and the loss of Western support for the war? But is it really denting Russian finances is the other issue.
Right. The answer, I think, is it seems to be no. I mean, this is evidence.
And that's certainly what the Poles were saying. That was the point made by Poland, the Baltic states, and Zelensky.
Well, those are the ones,
$30.
Right. Those are the ones, obviously, who want a tougher policy against Russia. Why the Greeks and the Cypriots, obviously, who have a vested interest in insurance and particularly shipping, wanted a higher price. But the Russians are going to make more from energy profits this year than they did in 2021. So the notion that this is designed to somehow punish Russia just seems to me it's not going to do that.
Well, the architects would say, importantly, that they're hoping it caps the upside, that Russia cannot benefit from a windfall from a spike in oil prices. But again, I think what's not said, which I think is the really important point, is the question about if you had a real energy crisis because of the loss of Russian oil, would you potentially lose public support in the West for the war? And I do think that is something, at least when you talk to the Europeans, there is this real concern about, can you maintain? I mean, Europe is facing, very high electricity prices. You have, potential discussion about deindustrialization of Europe because of gas prices, natural gas. Can you maintain public support? And so that's how I'm hearing this message saying, look, this is not necessarily going to hurt Putin's bottom line, but it's important to try to stave off an energy crisis that leads European populations against the war.
Got it. Bernard?
I just think it formalizes an existing arrangement where the Russians are getting a discount. So it's a lot of virtue signaling. But I agree with Helima that it's trying to also keep the Europeans on side, population, that is. I think, though, the real issue when looking at the oil market, and again, Helima will correct me because she's my favorite oil person, is China. Is China's demand going to rebound if they, if their COVID lockdown policy changes, and if we see a huge jump in demand, what that will mean for Russia, what that will mean for other producers.
I might add that Chinese factor, I think, is about 16% of world oil consumption. That's pretty remarkable. To both of you, the Russian, at least preliminary statements, seem to suggest that we're not going to sell oil to anybody who plays this price cap game. Do either of you believe that is real? And as a consequence, are we going to lose as many as 1.5 million barrels a day as a consequence of this? Halima?
I mean, I actually think we could initially lose, you know, 1 million or 1.5 million barrel initially as shipping firms, trading houses try to parse this legislation, because we only got the cap on Friday, basically less than 72 hours before the launch of the plan. They were formalizing all the remaining work on this over the weekend. And so there's also the concern that you could simply have the lawyers and the compliance departments leading with no while they try to figure out whether they can participate in this trade. Remember, in the early days of the war, we did have this initial buyer strike where you had trading houses and, you know, energy companies and shippers all say, we're going to pull back from doing business with Russia. We try to figure out the sanctions on the central bank, the disconnection of Russian banks from SWIFT payments. They didn't understand yet what the energy carve-out exemptions meant, and you had Russian oil come off the market. It rebounded, particularly because of India. The question is now, are you going to have some initial dislocation while people figure it out before we even get to the issue of, does Russia withhold supplies? Now, the Treasury Department, the White House will say Russia is financially incentivized to sell at 60 because that's just seaborne. They can continue to pipe to China at whatever they can, you know, get from the Chinese from that. But that this is the only revenue they have basically at this point to fund the war, and they're going to continue to sell regardless of their statements. But if you look at the Russians and what they have done, look what they've done on natural gas. Now, yes, they earn far more money on oil than natural gas. Natural gas has always been the weapon of choice, but they did make good on their threats. Remember, they said, if you're not going to pay in rubles, we're going to cut you off. And initially, everyone said, we're not going to pay in rubles. Well, they did a couple selective cutoffs, and then everyone came up with a workaround arrangement with this special K account at the Gazprom Bank, and they tried to pay in rubles.
Right.
They've been cut off still, but the question is, will Russia do selective cutoffs to try to drive up the price of oil? I think that that is something we at least have to think is a credible risk. Not that they go to zero, obviously, but they do some selective cutoffs to try to push some of the pain back onto the West and try to create a winter of discontent.
All right, Bernard, a thought on this? Will the Russians?
So my worry, my worry about Russia is, firstly, I mean, we need Russian barrels to maintain the global economy and without going into a major recession. That's just a fact of life. They're just too big in the global energy market. The second point I would say, and what particularly worries me, is not so much Russia not being able to sell its oil, but let's say they need a spare part that they can only get from the West and which they can no longer get because of sanctions. And then Russian production collapses because they don't have the right turbine or they don't have the right pump or what have you. Then we could really face a very serious energy crisis. The Europeans would immediately feel it, but we would all feel it.
Yeah.
So that's those are the kinds of things that I don't know whether they've really been thought through by people in DC and people in Europe.
Well, I think uncertainty is going to prevail. One of my favorite oil analysts months ago, I think, suggested that wouldn't it be interesting if the Saudis would then step up to replace?
But they can't make up. But they can't make up Russian production. I mean, the Saudis can only step up,
at any rate,
up to a small point.
Right. Forgive me for my naivete, but it was just a thought, and somebody that I know and respect on this issue actually put it forward as a credible possibility. All right.
Well,
so
actually, let me just quickly take that, because actually I did ask the Saudi oil minister at the FII, would you look to backfill Europe? And he did say, on a number of occasions, he pointed to what happened during the first Gulf War, that they increased production, talked about what happened during the Arab Spring with Libya. And so I do think that we should expect to see, and Saudi, exports to Europe have increased, same with Emirati and Iraqi barrels. I think we will see, further movement of barrels if there is, significant shortages. But the question is volumetrically, like if you're losing, several million barrels of Russian oil, that becomes a hole that's just too challenging for anybody to fill, given where we are with spare capacity.
Right. Okay, so let's turn to Saudi Arabia internal and the U.S. Saudi relationship. I was thinking this morning, I want to introduce this subject as what are both of your views on MBS's Saudi Arabia? And I thought to myself, why am I using the term MBS's Saudi Arabia? over a quarter of a century, when I was working at the Department of State, we dealt with a succession of Saudi kings that came and went. And I'm not sure I would ever apply that characterization to Saudi Arabia. Both of you have had a fair amount of contact with Saudi officials. Bernard, you with the Crown Prince. Helima, you with, I think is his half brother. Have I got that right?
Yes.
So I just wonder, and again, I'll say, in use of full disclosure, I'm not an objective observer on these matters. I mean, there are American interests and then there's Saudi interests. And frankly, in my judgment, they are sort of diverging in ways that they've never diverged before. We'll get to that in a sec. But some clarity. Bernard, to you first. Is the image of Mohammed bin Salman, aka MBS, as a extraordinary reformer, but as a ruthless, repressive authoritarian who has emerged as a serial human rights abuser within Saudi Arabia, and is also engaged in, if you believe Freedom House, and I do, a campaign of transnational repression and rendition in an effort to intimidate Saudis living abroad. Is that a fair characterization? Extraordinary reformer, bringing change to Saudi Arabia it's never experienced before. But the other half of the coin, which from an American perspective needs to be integrated, I would argue, into our policy towards Saudi Arabia. Is that a fair characterization, or am I showing my fundamental bias here?
There's no question that he's an authoritarian. And your initial question was, is this MBS's Saudi Arabia? I think that he's unlike any of the previous rulers, except for the founder.
I was going to say Abdulaziz. Okay, fair enough.
When you talk about Saudi Arabia, Ibn Saud's Saudi Arabia, you can't say that because you radically changed the place. I think MBS is involved in something, not quite as almost as comparable as what the founder did, in a couple of ways. One, he's centralizing power in a way that never was the case before, and he is transforming the country. He's moving the country essentially away from a country where the legitimacy is based on a particular interpretation of Islam and the use of Islamism as the kind of basis for the country's influence and power, to nationalism. He is a populist nationalist, and he has 70% of the population, the youth, who think he's a rock star, despite all the repression. And the people who are slightly older, who are beneficiaries of the old system, don't like him, because he's taking away their privileges and taking away their entitlements. So, all politics are local, ultimately. And what he's doing domestically is, whether we like it or not, hugely popular with the bulk of the population, simply because the demographics are young and are with him. I can go on about this if you want.
We'll get back. I want to spend some time on this, Bernard. So we're going to come back to this, but I want to, Helima, a thought or two. I mean, authoritarian. U.S. deals with authoritarians all the time, right? Putin. I mean, the list goes on and on and on. So is this?
I think the point that Professor Haykel made about the young population and that is his base of support. I mean, one of the things that really has struck me, I've been going to Saudi again. I deal on the energy side. Bernard Haykel much further in terms of his range of contacts, but I've been going for 16 years, and to me, I think about when I first went to the oil ministry, and there was no women's room for me to use in the ministry. It was older. It was you felt like everyone was over 50 there. I mean, I have been really struck by regardless of all the other issues you've raised. I've been very struck by when you go to the ministry now, who sits in that ministry. I mean, if you are above the age of 40, you are in the distinct minority. You have a lot of, young women. I've seen particularly on the issue of women's role in the economy, access to education. I mean, they have been, in terms of economic beneficiaries, they are really sort of taking advantage of the liberalization. And again, now you would go to something like the Ministry of Energy and you would think you were in a tech company. And so I have been very struck by just the pace of change in the sector that I cover. And to me, that is really interesting, because one of the issues that we face oftentimes in the United States is we think about the energy industry, and it's like, how are you going to attract young people to want to work in this industry when we think about the real focus on net zero and climate change? To me, it's very striking, at least in the sector I cover when I go to Saudi Arabia, how much they've really changed the demographics of who sits in something like the Ministry of Energy.
I'm still left a bit uneasy, though. I mean, I worked to strive to sort of propagate American interests in this region, and even though I don't think there's an administration, and I worked for half a dozen who put human rights at the top of the list, any administration I've ever worked for, from the Carter administration to Bush 43, made human rights a fundamental priority for the United States. Various times there were initiatives. How do we balance? You are both Saudi watchers. You have professional career in dealing with Saudi Arabia. You travel there frequently. How do we reconcile this ethically, emotionally, and then from the standpoint of U.S. policy? Because this problem is not going away. This man is going to ultimately become king of Saudi Arabia and may rule the country for half a century. So this is not a headline, Bernard and Helima. This is a trend line. How do we reconcile this?
Aaron, can I just jump in for 1 second? Because it a little bit dovetails into what we had talked about in our previous conversation. If you think about when the Biden administration came into office, I don't think they ever thought they were going to be having to make phone calls to Saudi Arabia or to be lobbying OPEC in terms of production policy. It was an administration that came in. We were coming off of, a tremendous collapse in oil prices in 2020 because of the pandemic, the biggest collapse in oil price. Remember, oil went negative. When they came into office, they were very focused on climate initiatives, and they were not particularly concerned about rising energy prices. And then we got hit with this economic reopening. We got hit with a lack of, production because of, investment had come out of the sector. And even before the war in Ukraine, we had an SPR release, when oil prices, were in the 70s. So I think what happened, or one of the driving factors, it's really, gotten to, where you are in terms of saying, why aren't we so focused on human rights? For this administration that came in talking about human rights, I think they got stuck in an energy crisis that they basically had to try to manage. And so when you are stuck with an energy crisis and you need additional barrels, U.S. production, has been, we're not going back to that 13 million right now. I mean, we've had, investment come out of the sector. And so they had to make, and the U.S. does not sit on spare capacity. So they found themselves having to make asks that I would say they were not anticipating they would have to do so.
Right. Okay, Bernard, to you on the
so
issue.
I would, in response to your question, look, that balance between interests and human rights and values is a difficult one to manage almost anywhere in the world. We have a very close relationship with Prime Minister Modi. He's hardly, a paragon of human rights and values that we care about, especially when you think about how Muslims are treated there. Sisi in Egypt and elsewhere, Israel, as you've pointed out in many of your own writings. So I don't see why Saudi Arabia should be this uniquely kind of, different from all these other countries. I find that in my dealings with the Saudis, that if you go and talk to them privately on questions of human rights and the release of prisoners and so on, it's much more effective. I was involved in a couple of those cases, and people were released. So the other is to keep your eye on the ball as to why this country is important. Look, it's the center of the Muslim world. It's the most important country when it comes to oil production, and it shares, our concern for stability in the region and for containing forces like those of the mullahs in Iran. So, the ledger is, full on both sides. And one has to keep the balance between them.
I think, though, that again, the first book I ever wrote was on the origins of the U.S.-Saudi relationship. I followed this not as closely as the two of you have. And there is this notion, though, and as how to relate and to conceptualize the countries that we deal with. Is Saudi Arabia has been referred to as an ally of the United States. And I would argue that an ally of the United States, France, Germany, Japan, South Korea, Britain, Canada, Australia, are countries where there is a high coincidence of both interests on one hand and values on the other, high coincidence, and a strong, sustainable domestic base of support. Because in a democracy, obviously, as in authoritarian countries as well, public opinion in a democracy plays a more critical role. So I guess the question is, high coincidence of values with respect to the U.S. Saudi? No. High coincidence of interest. And this is where I need your opinion. If you look at human rights, if you look at relations with Russia, if you look at relations with China, if you look at oil, we are not competitors with Saudi Arabia in a way that I think, Helima, correct me if I'm wrong, we've never been before. So if in fact our coincidence of interest is largely episodic and there's no coincidence of values, how then do we relate to a country? And again, full disclosure, Jamal Khashoggi was a friend of mine. This to me is a major problem, and it continues. Saudi human rights violations continue. How do we relate to Saudi Arabia? What is it? Is it an ally? Is it a problematic partner? Is it a frenemy? Because this problem is going forward. We're going to have to deal with Saudi Arabia and MBS for a long time to come. And I guess that's my question to you. Do we simply have to reframe our own analysis and say to ourselves, this country, what a surprise, is acting in its own interests. It's not doing this for any favors for the United States. There's no value coincidence. It's an authoritarian country, much more in common with President Xi is showing up. There's a strong Saudi relationship with other authoritarians at a time when the United States is presenting itself as a arsenal of democracy as we back Ukraine against Russia. How do we, in the end, final comment from both of you, you both have tremendous authority and expertise on this issue. How do we look at Saudi Arabia? Problematic partner? Ally? Frenemy? How? Helima, to you.
I'm going to start on energy, and I'm going to hand over the broader question to Professor Haykel. But I do think when we think about energy and the energy relationship, I also have to think we have to be really honest about what is our priority. Because again, what has struck me is that we have very much a focus now on retail gasoline prices cannot be above $4 a gallon. Like that was a clear point that was made. And clearly, we are very still focused, look at the Inflation Reduction Act, on pushing forward with our climate agenda. But if those two things have to be, if you cannot have an honest conversation with American consumers about demand, I mean, think about the whole conversation was, we need additional supply, and we're not asking Americans to put on a sweater. We're not really having conversations about how we ratchet down demand. Then we are going to, in this transition, because transitioning, to net zero does not mean ending dependence in the near term on oil. We're going to still need, if we are concerned about higher energy costs, if we have decided that U.S. consumers are going to continue to have to hopefully, if we want them to pay below $4 a gallon, or God forbid below $5 a gallon, we're going to still have to have these conversations with the producing countries. And I would say, who's going to continue to invest in the upstream sector? Who's going to make those investments in conventional oil and gas? It's going to be these Middle Eastern producers. They are the low-cost producers. And so I think we have to be really realistic in terms of our economic priorities about where that oil is going to come from. And again, we can have conversations about ratcheting down demand in this country. But if we're not going to have those conversations, then we're going to be picking up that phone call.
I'm looking out in my driveway right now. I'm looking at two Honda CR-V SUVs and wondering why I'm driving them. Lessening demand is pretty important. It may actually be an answer to my question. Bernard.
I would add to what Halima says that, the Saudis have the cheapest and cleanest, in quotes, and in terms of methane emissions, cleanest oil in the world. So we're going to become more and more dependent on them as we transition, not less. As far as the earlier question, look, the United States, committed a violent and illegal war in Iraq. So we have to be a bit careful how we preach in this part of the world. The other thing I would say, as far as the Saudis are concerned, is that, in the war against communism during the Cold War, in the war against radical Islamism, Saudi Arabia was a huge ally and partner. I don't see why. It's not an episodic thing. There are long-term trends that we care about: stability, oil market balancing, energy security, peace with Israel. All of these things really matter to us, and Saudi is a key to all of those. So I think we can build a relationship and eventually become friends, closer friends. Is it Denmark? No, it will never be Denmark, and we have to accept that.
Right. I'm thinking, though, again, going forward, we need to change our own mindset and our own view. My own view, and I've believed this for years, that the default position for administrations I've worked for is that, unlike Lehman Brothers, the U.S. Saudi relationship is still viewed in Washington as too big, too consequential, and too important to be allowed to fail. So whatever my personal views, I'm not sure we're going to impose quote unquote consequences for the things we don't like that the Saudis are doing. But let me thank both of you. Halima, as always. Bernard, thank you so much. Your deep experience and authority on these matters was on display. And again, and for all of you Carnegie Connects viewers, we're going to finish out 2022 with a great session on Russia and Ukraine, featuring Carnegie's own Andrew Weiss, author of a unique graphic book, The Life and Lies of Vladimir Putin, and Ekaterina Shulman, one of Russia's a Russian political scientist and one of the best analysts of contemporary Russia. That's going to be on December 15th. So until then, as I close these sessions, be sure to think positive and test negative. Take care again to both of you. Thank you.
Bye.
Bye-bye.
Thank you.